In this video, I would like to give you a few ideas of the assets that you can trade with this strategy and how to select them without losing too much time. So I showed you before that there are many assets that you can trade that are tradable assets in general. So we have stocks, indices, commodities, currencies, ETFs, cryptocurrency, and not all of them will work with this strategy. Some assets are extremely choppy, they go up and down a lot. And usually assets that trend will be the best ones that you want to use, and more specifically the indexes, because in the indexes there are many companies, so it's like a big ETF, like a big basket of companies. Like S&P 500 is probably the best one. There are 500 companies inside here, so you can imagine that it has a lot of momentum and when it moves, so that's why you can make money with a moving average like that and a smart indicator. So this is the main asset that you're probably going to use. Then correlated with S&P, so correlated means that they move kind of the same, is the Dow Jones. So it's the Dow Jones Industrial Average. So those are, Dow Jones has around 30 companies from USA. You can check online which companies are those. And you can see it kind of moves the same. The only thing is that it has longer moves going up and down. And you really need to backtest this carefully to see if this is going to work in any way with the moving average and the indicator. And you can slightly modify the indicator to see if you can improve it. I also tried this in the past, and it seems to me, I'm telling you this because it seems that it moves a little different now, especially after this big financial crash. So 2021, it's a recovery year for trading. So many assets, you see that they didn't work too much very well this year, but you can see in the past Dow Jones. So I made here, I've been riding all of those moves with Dow Jones and it went very well. Then the financial crisis came and it's been a little choppier and it has many gaps. So you might want to backtest this to see how it did this year and in the past, and also compare it a little to see if it's worth your attention. Next, another American index is the Nasdaq, 100 companies, all of them tech companies. So it moves very well. It has very nice trends going up and down. But the same, you want to check this, and also with the REX indicator, you want to adjust that to see if you can have some nice profits around here. Also, you want to be careful with your stop loss. Just try the standard strategy with the stop loss under the candle that offers the entry. So if in here you have an entry, you see that if you move your stop loss above, you'd be stopped out a few times already. Here it closes below. If you have your stop loss in the middle of the candle, you get stopped out again. But the third time, if you take this ride, that's going to cover all your losses here and make a lot of profits. But again, you need to make a rule on how many stops are you going to take one after each other, and what are you going to do when you take a loss. If for the next trade, this is what I do in my trading, if I take a loss, the next trade I use half of the risk that I used on that trade, and I'm going to use half of the risk until I recover that loss, and after that I'm going to move back to the full risk. This is just my strategy, but it's also an idea. You want to make all of those calculations when you do a back testing. But the Nasdaq, has been a popular market this year. It just went up. You can imagine that all those big companies are here, Google, Amazon, all of those tech companies, Tesla, they're all in this index. Another index that I used to trade is the UK 100 or FTSE or the FTSE, how they call it. Again, after the financial crash, this it's definitely a no-no for this strategy. So you cannot trade this asset. You see how it stays on the moving average all the time. In the past, it used to offer some moves. So I used to buy it and ride some of those moves. But you can see that it goes above and below the moving average, so it doesn't just sit on the moving average. And now this year, you see how it done. So you might want to leave this for this year and just maybe check it again next year to see if it's behaving. The German index DAX is the same. It's kind of correlated with UK sometimes. You can see in the past it did give moves, goes above and below the moving average many times. Very nice, even on a sell. But this year it has been chopping on the moving average because probably nobody has the confidence or the trust to invest in the companies with all the legislations and everything that happened this year. So I'm going to remove those from our list to see where we are going to get. Next, I would like to show you another European index. So this is the CAC 40. This is the France index. 40 companies, all from France. And this has been behaving very well. You can see nice moves. Goes above, below. So you can find trades in here. And even this year, this has behaving better than other companies. Of course, here you wouldn't want to try and trade this. But this is an asset that you should keep an eye on it to see how it is going to behave. So there are many indexes. You can try the European index, the Italy index, you can try the Spain index. You can just check all of those to see how they move. You can try the Japanese index, the Chinese index. And there are many countries that they have a national index. And some of them, they behave really well. If they don't, you can see it. If it's just chopping on the moving average, just don't lose your time with that. Next, I would like to show you some ETFs. So this is an ETF that it's the S&P 500 ETF Trust. So this kind of moves together with the S&P 500. So you can follow this, especially if your broker allows you to trade this. You can check. You'll need to check with the broker that you're going to have if you can trade those assets, all of them. Usually indexes you can trade them, but with other assets, check first with your broker before losing too much time backtesting, because maybe your broker is going to say no, or not is going to say no. You just find it on his list or not, and probably they're not going to add it only because you ask them. You will have to change your broker. So do that first before you invest any time. Another ETF is the Invesco QQQ Trust. So you can check all of those online to see what companies they have inside and what do they mean exactly. You can see also this one that sometimes it has pretty good moves, sometimes it's choppy, and you want to see how the standard strategy works, and if you can do something to improve it. If not, again, the rule is to go forward. This is the Vanguard Growth ETF. Again, those are probably the most popular ETFs, that's why I'm showing them. So you can see that sometimes they go up. Maybe you want to go in with a moving average after a move low and just leave like a position trade to go forward on those ETFs, because if the economy is good, those ETFs, they tend to grow. So this is how you enter inside with a trade on an ETF. Once it moves up and you're in a profit, you just want to move your stop loss to break even and just leave it there. Maybe it's going to go up, it goes down. So if you go far away enough, maybe those moves downs are not going to take you out of the trade. Just make sure you have that at break even so you don't have a loss actually. And if you catch a big move like this is going to be nice. You can have a trade for 6 months or 1 year, and it's good to just forget about it there, and then you see that you have some money. Then another popular ETF is the iShares MSCI USA. So you might want to check what does this mean and what happens. Maybe you're going to like ETFs. This one, you can see it maybe for long-term investments. It can be if you ride it, if you go in it and you have position trades, long trades, but not for what we usually do on S&P. Next, let's check some, let me just remove this. Let's check some stocks. So this can be a good way to go into a stock. You see how using this, you could have just went into these big moves that Tesla had. And many times what I did here, so I had a position here in this Tesla stock where I didn't trade it all, but I did here some money. And what I did here is that I made some adjustments, and every time the moving average would take me in, I would try to stay in and to have my stop loss at break even. So the market used to go up and it used to came down and hit my stop loss at 0, so no loss. And it used to go up again and hit my stop loss. And then here I went in here and I added my stop loss because I wanted a long-term position in this stock, so not just trades, because you see it's kind of choppy. You'll have a lot of losses around here. So what I did here is that I went in and I added my stop loss under this swing low, so under the first swing low, and it just kept me above the moving average. After that, you see when it came down, it didn't even affect my stop loss. And of course, the risk was the same, so I wasn't using more risk in here. No, the risk was the same, and I did a few R's here when it went up. So this could be a strategy to just go inside the stock that's going up. But of course, for this you need to have a stock that has a lot of potential. So in this period, Tesla had a lot of potential, so they had many earnings that they were positive. So from now on, we don't know exactly what's going to happen, but I used to look at it when they used to put out like a new product, like a new vehicle. That's when it used to explode a little, or just have like a challenge. So in here they had a challenge, so they needed to make Model 3 mass production. So mass production automotive means that you have to make 1 million vehicles per year. So if you divide by each day, they needed to make a certain number of vehicles each day. And I used to watch the news and see that they're making progresses. So there was, I don't know, around a few thousand vehicles per day they had to make, because I worked in the automotive industry, so I know they have like a carousel where they mount the vehicles. So they need to improve the work in there so that the carousel works, goes faster and it works better. And when I see that they are improving this, and the ambition that Elon Musk had to just do it, and that it had a lot of backup, and they were very close to making it work, then I started to follow it. And I was 100% sure that it's going to make it. And that was the moment when basically they had 100% potential to become an automotive company, because before that it's very bad. No, the investors will not be interested. So in that moment when I seen that they can do it, I was sure that investors are going to be very interested and they are going to take longs in the stock and squeeze the shorts, because they had a lot of shorts. So that's a good thing. There are shorts on a stock, and the long investors, they become interested. They are going to squeeze them and take their money. So that's a pretty good stock. So Tesla was brilliant. Next we have Google. So Google has been going up this year, of course. Nasdaq goes up, as you can see, and you can backtest this. Sometimes it's choppy on the moving average, but you can see if it actually gives you signals, if it gives you break even. So if you exit at 0, that's not bad, that's not a loss, that's 0. So that's good, because you are respecting the strategy and you're not losing, but when it goes up, you make money. So you need to check that if you can backtest this. Next we have Apple. So Apple, you see, it hasn't been behaving very well this year. You can also see that after the financial crash, it just went up. It stayed above the moving average all the time, and it went up all the time. So again, you can calculate to see if you can survive these choppy periods in a stock like this. So I'm going to close this because I don't really like it. Then we have cryptocurrencies. You can see that Bitcoin, it could have give you nice signals when it went up, when the investors had interest in it. It went up, so you had several signals here for Bitcoin. One here, then another one here, and it goes down. You have a loss, signal goes up. I'm sure you will make a profit here. And it goes up, goes down a little. Maybe you'll be out at break even, but it closes below, so probably yes. But then you get another signal, it goes up for the last time. And here, maybe this is a coin that where you should also check for selling. So especially when it does this, so it makes several moves higher, so high, higher, 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 and then you see also the lows are a low here, a higher low, a higher low. So when it breaks one or two of those lows, it might come up for the last time and then it just goes down. So many assets do this, especially currencies. So yeah, this has been, you see here you've been it has been here another signal, but you had here several fake signals. So you also want to check those periods to see how you'd have survived those, and if you can do any mitigation around here, like because if you see it going up like that, then it comes down, just hits your stop loss. Here the same, no mitigation, so yeah, it doesn't give you too much mitigation. But you can see the potential. When it goes up a lot. Maybe you can check some rules, like when you see those long wicks in here, it doesn't look very good. You see when it goes above the moving average, it doesn't have a wick or is very small. So that's better. You can try, I don't recommend you too many currencies, too many cryptocurrencies. So Bitcoin, when there is interest for investing, you see it goes up pretty well. Here we have gold versus US dollar. So you want to check this. And gold goes up and down. It's one of those markets that goes up and down, and you have choppy periods along the moving average. So I don't think this is a good asset to trade with this strategy. Maybe if you can find a rule to go inside of one of those trends that stays above the moving average. So you want to maybe have a look for that. If not, just go forward. Don't lose too much time. So in here I would take this off the list. This is the Nifty 50 index. So again, you see this, it can give you pretty good signals. If it goes up, it's very good. But you also have choppiness around here. So you wanna check how many signals it gives you. But you see, I see mitigation around here. So I see if it goes down and it makes this, maybe I'll just move my stop loss higher so I can mitigate the loss. Then you want to take a look at forex pairs. Even if forex pairs, they move up and down a lot, so they don't give you too much to trade. I found that the Australian dollar versus the New Zealand dollar is probably the most civilized pair, that it goes up and below the moving average. It also has moments of choppiness. So you see it has those nice trends when it goes above the moving average. But when it goes down in a trend, you see it just goes up and down, up and down. So this can be losses or mitigation around here. We can look at other pairs, but this is probably the only pair that it seemed more civilized to me. If not, just stick on indexes. First of all, look at some ETFs, and you can Google and watch even some YouTube videos about ETFs. There are some people out there explaining well how ETFs work and the more companies you have in an ETF and the more investors, the better it is to work with this strategy. And again, I just want to remind you that you don't, so I'm showing you here way too much what I showed you here, but you do not need too many assets to trade, to find trades in the same time. Maybe you need 3, 4, maximum 5. But look, you have here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Ethereum US dollar, I'm going to delete this. So you have 12. And there are other indexes in the world that I didn't show. So you can also check those. Maybe you'll find 4 or 5 indexes to trade, and that's it. This is what you're going forward with, because you have a risk that you need to respect. So that's maybe 2%. and you need to split that risk with those assets. So you cannot just put 2%. You have like 3 assets and you put 2% on each, because that's 6%. You're at risk now 6%. It doesn't matter that there are different assets. This is how trading works. So you need to take that in consideration, that you don't need many assets in the same time. You just need 4 or 5 assets that usually give you trades, because you want to go forward with the same assets. If you backtested your strategy and you have different adjustments on each asset, you don't want to change it because you modified the consistency rule. You'll not have the same consistency, so you want to be careful with that. If you want to change your asset, you need to backtesting to see if it would be as good as the asset you are replacing it with to go forward. And in another video, I'm going to explain you how to recycle the risk, so you can add. So if you have your risk in an asset and it's not available, once that goes up and you're on a profit, there are some ways and some mitigations that you can do to secure some profits and then use the risk on another asset. So I'm going to show you that in a different video. It's very simple and it has strict rules that you can insert in your trading plan. So see you in the next video.